RBA says it's likely that fiscal and monetary support would be required for some time. Is that your view as well?
Well, in terms of monetary policy, we already have a very low cash rate here in Australia, like other countries around the world. So monetary policy has been working hard over the course of the pandemic and in the lead up. In terms of fiscal policy, we've announced the equivalent of 13.3% of GDP in terms of financial and economic support, some $260 billion. And that support is in the number of forms. It's coming out in terms of support for the cash flow of small and medium-sized businesses. It's in the form of wage subsidies and direct income support, cash payments to households, and particularly pensioners and others who are on other forms of income support. So we've put in place a comprehensive range of measures and certainly used our balance sheet to effect.
There are concerns about the fiscal cliff. I mean, you're the architect of the JobKeeper program, which is due to expire in September. Is there a sense that it will be extended?
Well, the JobKeeper program is currently under review. You're right, it's legislated to the end of September. It's a very significant wage subsidy program. It's a flat payment of $1,500 per fortnight. There are more than 3 million workers who are on that. But we recognise that some sectors will recover faster than others, particularly as the restrictions are starting to ease. We're seeing the hospitality businesses, the retail businesses be more busy. But at the same time, as long as those international borders are closed, tourism is going to hurt.
So that would mean that you may extend the JobKeeper program for certain sectors. Is that a fair assessment?
What we've been looking at is sector specific support. So, for example, when it comes to the construction sector, we've announced cash payments to households who undertake a new build or a substantial rebuild of their property. We have announced some infrastructure projects that will be brought forward, working together with local and state governments to boost aggregate demand and of course, employment. We've also announced specific measures for the tourism sector, recognising the strain that they are under, and we're in discussions with the arts sector, recognising that as long as those social distancing laws are in place, it's very hard for them to fill a venue, so to speak. So we recognise that some sectors need additional support, and that's what we've been doing in terms of the JobKeeper program. That is now the subject of review.
You talked about tourism. The international tourism industry looks like it's going to be dead for a while. What's the advice to people who've lost their jobs in that sector? Do they hang on till it reopens or find alternative work?
Well, in terms of Australia's tourism market, 70% of the activity is actually domestic tourism. We are starting to see the border restrictions being closed between states within Australia, and that will be good news for activity in the tourism space. But you're right, for those that rely on international tourists, and Australia has been a destination for many of those in recent years, that sector's being hit hard. No doubt there'll be some adjustments in terms of how they operate, but as long as those international borders are closed, I think that sector is going to really feel the effects.
When it comes to that JobKeeper program, Treasurer, when it starts getting pulled back, will it be a tapering or will it be cold turkey, you think?
Well, they're all the questions that we are considering as part of the review. What we do know is it's been very successful in maintaining that formal link between the employer and the employee. And unlike other countries that put in place similar wage subsidies for 3 months, we've legislated it for 6 months, recognising that the supports would be required for some time. But as I said, it's one of a number of measures that we have put in place to support the economy at this time. We also have a $30 billion cash flow boost, which provides financial support to businesses based on the size of their payroll, and that money can be used to reduce their labour costs as well as meet some of their fixed costs. We've also made a number of regulatory changes around insolvency and bankruptcy laws and other red tape reductions to provide a regulatory shield for businesses through the COVID crisis. So it's not just financial and fiscal support, it's also regulatory changes that we've undertaken to support the economy.
I guess the thinking behind that question has to do with Canada, for example, has been trying to get millions of its people off government support, and it's one of the trickiest issues in its recent history. I mean, what's the situation with Australia? Might that mean a job reallocation, further unemployment? What could be a result of that?
Well, the most recent unemployment numbers showed that they increased to 7.1%. And you know that was for the month of May, and that reflected a lot of people losing their jobs over April and May at the height of the crisis. Not forgetting that we actually entered this COVID pandemic from a position of economic strength. We saw unemployment fall to 5.1% in February. We balanced the budget for the first time in 11 years. We had a strong current account surplus. We had the lowest welfare dependency in 30 years, and we had the largest tax cuts in more than 20 years. So the economy in Australia had approached this crisis from a position of economic strength. But we are definitely seeing the impact both on GDP and output, but also on unemployment as a result of these health restrictions. But because we've had more success than most nations in flattening the curve, we are now starting to open up the economy. So we have an agreement between the federal government and the state governments to lift the restrictions in 3 separate stages, and the culmination of those restrictions being eased will see the economy benefit by more than $9 billion a month, and more than 850,000 people get back to work. So while the unemployment numbers are certainly always too high for our liking, we are starting to see some progress with consumer confidence coming back, business confidence coming back. The equity markets have been elevated. The Australian dollar has risen off its lows, and I think and the economy is moving in the right direction.
So you're saying there's no risk of unemployment getting to double digits in the next few months?
The unemployment number will get higher in the coming months, and we've said that publicly.
Double digit possible?
Well, what we have said so far, and we'll provide an update in July, is that we think it's reaching about 8% in the September quarter, and as I said, it was 7.1% in the month of May. So it will rise, but with the restrictions being eased, we will start to see more people come back into work, and that's a good thing.
You talked about the reopening of state borders, but we're also seeing perhaps a second wave in Victoria State. I mean, could that hamper reopening efforts?
Well, obviously, what we've seen in the state of Victoria, as you say, is a number of new cases. But authorities are working hard there to ensure that the testing and the tracing systems are in place. We also have a COVID app where more than 6 million people have downloaded an app on their phone, which will also help stem the increase in cases. And we've got good cooperation between governments and health authorities. So let's see how that plays out in the coming days. But certainly the state government is focused on stemming that increase in cases.
Treasurer, amid all the challenges, relations with China continue to deteriorate further. The government is being applauded in diplomatic circles for taking a more hardline stance to China, not bowing to economic coercion as Pompeo described it, but with the threats of consumer boycotts and Beijing warning against students, tourists coming to Australia, there are concerns at the economic cost. Wouldn't quiet diplomacy work better?
Well, the first thing to say is the Australia-China relationship is very important to both countries. We have more than $200 billion a year in two-way trade, and increasingly as the Australian economy becomes more services orientated, our services are desired by Chinese markets. And so it's mutually beneficial. We supply a lot of the resources that underpin the growth story in China, as well as our agriculture being first class. And for us, we welcome Chinese tourists, Chinese students, as well as providing a good market for Chinese exports as well. But we will also be very consistent and clear when it comes to protecting our national interest. And we have done so in the past and will do so in the future, and we make no apologies for that.
But China's hit barley, beef, tourism, education. Is it an option for Australia to perhaps cut its economic dependence on China?
Well, like I said, the relationship works to the benefit of both countries. I mean, we supply more than 60% of China's iron ore imports. And that iron ore imports is used in the making of steel and underpins their economic growth. We're also a major supplier of coal and supply more than 40% of their LNG. And that gas helps underpin, again, their economic story. So China does rely on Australia for key imported materials and agricultural products. And we have a strong economic partnership with China, and we want that to continue. But when it comes to key strategic and geopolitical issues, we'll stand our ground.
China, of course, a lead partner in RCEP, Regional Comprehensive Economic Partnership. Negotiations are ongoing today. Do you expect Australia's diplomatic woes to China to cause problems in negotiations?
No, I don't. Australia has been a trusted partner in free trade agreements, both multilaterally and bilaterally. Indeed, when we came to government, we saw 26% of our two-way trading relationships covered by free trade agreements. Today, it's over 70%, and the expectation is it will get to 90% by 2022. We've struck bilateral free trade agreements with China, with Korea, with Japan. We played a key role in the conclusion of the Trans-Pacific Partnership. We've recently signed a deal with Indonesia, Hong Kong, Peru. Other partners are important for Australia. So we'll continue to support free trade because that's in Australia's interest and that is in the globe's economic interest as well.
When it comes to RCEP, shed some light on what the sticking points are, and realistically, when do you expect those talks to actually reach a conclusion?
Oh, look, lots of countries have their bilateral and multilateral trade issues, and they cut across sectors. I won't get into litigating it right now, but what I will say is we have pretty clear interest when it comes to these trade deals, whether it's the movements of people or the movements of goods and services, and we'll continue to advocate that behind closed doors.
Treasurer, we're talking about a new world order post-pandemic. In your view, what's the biggest change the world will see post-COVID-19?
Well, I think there's an interesting story about global supply chains and how stable and durable they are in post-COVID pandemic. I think they're vitally important. They provide economies of scale as well. But countries through this COVID pandemic have seen themselves having to find what is called PPE, or other medical supplies at short notice, whether they are the masks or indeed whether they are the ventilators. I mean, we prepared for the worst. We went out and bought 5,500 ventilators in addition to what we currently have, expecting a surge in demand with COVID. Right now, we only have 2 patients in an Australian hospital on a ventilator as a result of COVID. So we prepared for the worst, but unfortunately, we've had success and progress in flattening the curve. But what it did say to us was the importance of having a domestic capacity to manufacture certain goods in the event of a crisis. And I think many other countries are having the same conversations within their own parliaments. So going forward, I think you'll see countries be a little bit more self-sufficient in key areas, but this is not an excuse for protectionism. You know, we very much benefit as a country and as a globe from free trade, and we wouldn't want to see additional self-sufficiency in some niche areas be an excuse for protectionism, because I think that would be counterproductive.
How do you see the global economy recovering? V-shape, W, U? Are there signs suggesting either one?
Well, the OECD, the IMF, and others have been a little pessimistic about where they see the global economy this calendar year, but they are also expecting the economy to pick up next calendar year. So, for example, the OECD have talked about a fall of around 6% this calendar year. That's a big drop. Here in Australia, the drop will be slightly less than that, at around 5% according to the OECD, but the Australian economy is expected to grow by 4.1% next year. So I think that some sectors will recover faster than others, and that is a result of, you know, the international borders being closed. But I'm hopeful for the economy next year, after what is going to be a year to forget this year.
On that optimistic note, Jun.25 Josh Frydenberg, thank you so much for your insights today. It's been a pleasure.
Lovely to be with you. Thank you.